Today is Monday, April 30th, and this is the ADM Investor Services Monday Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADMIS's Senior Financial Economist. Alan, let's start with the financials this morning. Earnings for S&P 500 companies in the first quarter are now expected to grow by 22%. This compares to an expected growth range between 17% and 18.6%. Is the strong earnings trend likely to continue?
I believe it absolutely is. Now we have the president's tax cuts to help the earnings numbers. So this is a trend that will probably continue all this year, and I would think well into 2019.
Alan, gold. There have been some substantial gains in the price of gold futures since the lows were made in July of 2015. Currently, gold futures are trading at the bottom of a broadly based 1304 to 1365 congestion pattern. Right. Which way will gold eventually break out of this congestion pattern?
Well, the rule of thumb is that anytime there's a congestion pattern, that 60 to 65% of the time, that futures will break out of that pattern in the same direction that they came into the pattern. So in this case, prices moving up into this congestion. So even though this rule of thumb does not say how long it will take, it does say that ultimately we will break out to the upside in futures for the gold futures market.
Finally, Alan, a lot of talk in the media about a flattening yield curve. Does this suggest a recession is imminent?
Absolutely not. The yield curve is always either steepening to some degree, or it might be flattening to some degree, or a better way to put it would be less steep or more steep. As long as the yield curve is normal, which would mean interest rates are higher farther out than they are near term, there is no need to worry about a recession. Now, when the yield curve inverts, that would be where short-term yields are higher at the front end of the curve and lower at the long end. That would be a situation where you might be a bit concerned. But even that is not a surefire guarantee of recession. Other factors need to be looked at. Even if the yield curve were to invert, that is not the case now. We're not even close to inverting. The yield curve is normal. No recession is likely anytime soon.
Steve, turning to the grain markets, July soybeans and July soy meal rallied last week. Why the rally, and will it keep going?
Two things. I think number one is that there's hope that U.S. and China can resolve the trade issues and that China will not put the 25% tariff on soybeans. And then number two, it seems like globally meal is getting tighter. The Argentine premiums have rallied over U.S. premiums, which could move some demand into the United States. There was also a collision of a Chinese vessel at an Argentina port dock last week, which is going to slow their loading of meal. And their port is responsible for about 10% of the exports. Will it continue? It's all up as far as beans are concerned to the trade talks this week. It sounds like they may not come to a resolution, may have to extend talks later.
So we have to see what happens with those China talks. July corn made new highs today, highest price since last August, I believe. Can you please comment on the corn market and whether you think it'll keep going?
You almost think it's irrational exuberance because we have so much corn from last year. And the crop this past weekend got planted in a really fast pace, and we're going to get a rain on top of it. So it's perfect weather for the corn crop. But I think a couple of things. I think the market is looking at lower production this year due to lower acres. And I think the market's starting to focus on the lower Brazil crop and maybe a lower Black Sea crop that might help our demand.
Steve, wheat. July Chicago wheat traded over the April 10th high. What's going on in this market?
There were no deliveries in the May Chicago wheat contract. That was kind of a surprise to the marketplace. The commercial in Toledo is bidding 20 cents over the market to try to buy cash wheat, which no one really can explain why, because there's plenty of wheat around. But I think more importantly, Australia is dry and Russia is beginning to dry. And so I think that globally, it feels like even though there's plenty of wheat today, the supply of wheat down the road is getting smaller.
Finally, Steve, is the threat of inflation helping grain prices?
A lot of people think that. I mean, when we look at what's being written about inflation, they're suggesting that fund managers are going to be trying to buy commodities because of that. I asked Hightower last week, and he said that basically there's a lot of interest because of the higher crude oil prices, and that pushes up the CRB index, which brings in buying of most commodities. It hasn't helped the grains yet, but certainly a lot of fund managers are looking at that.
Okay, remember the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.